Hello traders, the title of the video is how to spot, buy and sell trading signal using bird's eye view. Alright, bird's eye view. That's a nice thing to say, alright? Do you trade financial markets using bird's eye view? Do you analyze stocks, commodity, currency charts using bird's eye view? Alright. So today we want to show traders how one can spot, buy and sell trading signal using bird's eye view. What we're going to do first, alright, as just a simple exercise, I want you to look first on this chart. So this exercise will allow us to understand how we can use bird's eye view, alright, to spot, buy and sell trading signal, like an eagle or like a bird, alright. So look at this chart, don't forget the chart. So take a picture, a snapshot of that picture using your eyes, like Google Pixel 3. Alright, Google Pixel 3 can take excellent, beautiful pictures. Alright, so take a snapshot of that picture, alright. Keep in your mind, because I'm going to show you another chart. That's how you're going to use your bird's eye view, alright, to spot, alright. Trading, buy and sell trading signal. Have you done? All right. You just so from here, just concentrate. Don't pay attention to what has happened here. Just concentrate on the price action. He went up, he pulled back here. All right, and there is this resistance here. Okay, take that picture. All right. Now, next financial instrument that I want you to pay attention to is the Australian US dollar. Now look at this one. Take a snapshot of that. So you are taking multiple pictures, like a pixel 3, but you're going to use the best picture, all right, or make a deduction from the observation that you have made from all those multiple snapshots, all right, and you're going to make a decision. You're going to spot, all right, a buy and sell trading signal. Can you take a picture of that? So what I want you to do here, like previously, you are doing the opposite from here. So in the previous video, remember, we were looking at the dollar yen. So for the dollar yen, what we have seen is that the price went up like this, and from something like this with a bit of blah 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 ladder. Yes or no? Well, this time, what you can see is that the price did the opposite. It went down. Okay. Can you see that? It went down. Now, it went up a bit at this section here. And then we see all this support level. So it's like, where am I? So it went down, it went, okay. Now we have should be down, up, with a bit of something like this. All right, price coming down and touching a support level. So it's like this. Here it went up. Now what the price doing for the dollar yen? There is a resistance there. You remember that resistance? Something like this, all right, and the price was now going back to that resistance level. So those are the two snapshots, like Google Pixel 3, that we did take. So by now, first time, pull back, trying to retest a resistance level multiple times. Here went down, rally up, try to go down multiple times. You see here, come down to that support level, coming down again to the same support level, retesting a support level. All right, so don't forget those snapshots, because it will help you to spot, okay, buy and sell trading signal using bird's eye view. So the third financial instrument, I will tell you now, is similar to this one, the dollar. The Australian dollar, US dollar, okay, is similar to the gold US dollar. Look at that. Why is this similar? Because, right, Australian, okay, depend on gold. So when you are comparing gold to the US dollar, it's similar to the Australian dollar. It's similar if you are compare the Australian US dollar currency pair is positively correlated, almost positively correlated to the gold US dollar, because there is a positive correlation between the Australian dollar and gold. Did you know that before? Because they produce a lot of gold. All right, so all right, this was going on. So if we go back now, we look at the gold US dollar, what the price doing here. I don't want to remove my pitchfork tool. If you look carefully, again, from this point here, taking a snapshot, the price went down. Can you see that? Then it rallied up, okay, to the key level. Now it's coming down to retest multiple times this support level. So it is similar to the Australian dollar, US dollar. So down, up, touching multiple times, a support level. So those are the three snapshots that we have taken, all right? Now what I want you to do is to compare them and see whether there is a correlation. So when we are talking about correlation, a relationship between those, okay, similarity between those three price structures. So I have already mentioned that the price structures of the Australian US dollar is almost identical to the gold US dollar, all right? So I have talked about that already. So like Google PCR3, I have identify that, okay? So the next thing now we want to do is to compare one of those two currency pair, i.e. Dollar, i.e. Australian US dollar or gold US dollar, to the dollar yen. You will, if so, without too much blah 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 from my side, what you will spot quickly is that I'm not talking about currency pair correlation. We are talking about the correlation between the price structure. So you need to be very careful because we are dealing with currency pair. We usually talk about currency correlation, which means correlation between currency pair. But the exercise that we are doing today, talking about bird's eye view, we are just comparing one price structure to another price structure by comparing the price structure of the Australian dollar to the Australian dollar US dollar, by comparing the price structure of the Australian dollar US dollar to gold and US dollar. We see that there are similarity, all right? Because there are similarity between not currency correlation but price structure similarities. So we can say the price structure of the Australian dollar US dollar is positively correlated to the price structure of gold US dollar. Okay, we are not talking about currency correlation, which is completely different. We are talking about price structure correlation. All right, because the trading algorithm, the trading software, the trading robot, the trading ninjas can recognize those similarities between price structures. Sometimes with those information, we can spot, okay, excellent buy and sell a trading signal like an eagle or like okay, birds, all right? So comparing, all right, gold US dollar or Australian US dollar currency pair to the dollar yen, we can see that the price structure of the first one are negatively correlated to the dollar yen. So the structure that we see here is for the dollar, Australian dollar US dollar or gold US dollar. The price structure is almost the opposite of the dollar yen. Did you spot that? So if you spot that, you can work with that information. So what you need to do to train yourself to spot those trading signals is that sometimes one of those charts, all right, can be ahead. So they may do something that Okay, the other one haven't done yet. So because of the correlation between those two, whether it's a positive correlation or negative correlation, you can make a deduction and know what kind of signal you should expect next when you are trading, okay, one of those, okay, a price structure. All right. So if we go back now to the normal currency pair correlation. So for instance, we know that I'm talking now about currency pair correlation, all right, not a price structure correlation. So if you are talking about currency pair correlation, we know that the euro dollar very often, okay, will be going up at the same time when the pound dollar is also going up, and then both of them will go down together. So they are just like a twins doing exactly the same thing most of the time, but not always. So they are positively correlated when we are talking about currency pair correlation. But we can do, so sometimes you will see that the euro dollar may go up fast, all right, when the British pound, US dollar is still lagging. So with that information, because we know that the British pound, US dollar, is likely to follow the euro, but the euro is ahead, there is a bit of latency between the euro dollar and the British pound, US dollar. And with those latency due to the correlation between those currency pairs, we can predict that soon the British pound, US dollar, will also go up because it's behind the euro dollar, but it's likely to do the same thing that the euro dollar has already done. Sometimes you may see that the British pound, US dollar, may do something fast that the euro dollar is lagging to do. Then we can forecast that the euro dollar has a high chance, not guaranteed though, but we are just expecting it. We are ready for it, and when it's taking place, we take advantage of it. So this is about currency pair correlation. But talking about bird's eye view, we are talking about correlation between a price structure, different price structure. As the exercise that we have done today, by using the bird's eye view, okay, strategy, we can see clearly that, all right, as a trader called Maguire spotted it last time on YouTube, he posted a video about the Australian dollar, the Australian US dollar currency pair, and he posted comments, okay, below that video and say, George, is similar to the gold US dollar. And I see it was clear. So that gentleman, Mr. Maguire, has spotted the correlation, the positive correlation between the Australian US dollar price structure and the gold US dollar price structure. Now, as we go a little bit deeper, we see that the dollar yen price structure is doing completely the opposite of what both the Australian US dollar and the gold US dollar price structures are doing. So now, how do we use that information to spot the best trend signal? We look for discrepancy relating to the correlation between those currency pairs. Is one of them ahead? Is one of them behind? What is the discrepancy? What is the latency? All right. In a financial market, using the latency is powerful information. It just something has more than 80% of chance to happen, and you want to be ready for it. Breathe in, breathe out. Maybe keep your fingers crossed for the first time, and implement a top-down trading method without closing your eyes, of course. All right, I know that ladies love to close their eyes, all right, but don't do that. All right, don't close your eyes when you are trading. Keep your eye wide open, and then use a different time frame trading method to trade. So now, as you can see, this is the gold US dollar currency pair. You can see that it retested that support level neatly here. Can you see that? It touched it. That support. So it went out first. You see, retest neatly. The support it goes down, went down. Now it retest that support level 115378. All right. Okay. By the way, if you want to know the video that I'm talking about, this is, by the way, gold US dollar. We tested that support level neatly. Now, let's see what the Australian US dollar is doing. You see? Also, you see, almost retesting here. So, you see, so here you see, it didn't touch it here almost, yeah? Now, as the price was coming down here, you see here, suppose you were here, and the price was somewhere here. What will be your forecast because of the positive correlation between the gold US dollar and the Australian US dollar? If you were here, let me put a vertical line there. Your forecast will be that this Australian US dollar, it was behind, therefore has a high chance to also come all the way to retest that support level because of the positive correlation between gold US dollar and the Australian US dollar. That will be a forecast that you can make. So now, if one of those two currency pair, if for instance this one goes up first, start going up like this, all right, here, but the gold US dollar is lagging, is staying behind, which means it did not go up here. You see, this one is going up nicely now, you see. So if one of them is ahead, we can use that information to forecast that the next one also that is positively correlated will also follow suit. So we are really expecting the move up. This is about using bird's eye view, okay, to spot, buy, and sell signal. Now, if you look carefully, my friend, if you look carefully, both has touched those support level that I mentioned, okay, but we know also now by keeping our eyes wide open, like an eagle at the highest places, all right, using the bird's eye view, something very interesting is happening now. Look at the dollar yen. What can you forecast here? The first forecast will be that resistance level, you can see that it touched it only once here. So our forecast will be that the dollar yen has a high chance to touch that support level. So our expectation that probably it also gently come and touch that resistance there at 11625. Remember that is an expectation. The price can just ignore our expectation and continue to go down. And you will say, George, this is a mumbo jumbo. So all we are saying, by using the correlation between the price structure, like an eagle, using the bird's eye view strategies, trading strategy, we are expecting something. And if it's taking place, we'll look for trading setup. So we are expecting to go out. So we'll be looking for bullish trading setup. And for sure, we'll be using, okay, a multiple time frame trading method to control the risk. So at this junction, because of that forecast, that expectation, using the correlation between the price structure instead of correlation between currency pair, all right, we will say to trader priority to bullish signal above 11264 for the dollar yen, and priority to bearish signal below that level. Looking at the other two currency pair, we want to just quickly verify, is one of them ahead? So you can see that the dollar, the Australian dollar, US dollar, is still down. But if you look at the gold US dollar, is already going up. So we can forecast that soon, probably, this is again expectation. The price can ignore our expectation. It's not guaranteed that definitely the price will do exactly what we expected. This is a very important point for those who get carried away. All right, don't get carried away. Don't behave like a child. All right, this is just a warning. All right, so though we are seeing expectation, because this one is a little bit lagging, the Australian US dollar is a little bit lagging in comparison to the gold US dollar. You see the gold US dollar is now popping up, or is it going to go down more to come back again down? But it looks to me it's turning around here, so we can expect, we can forecast, we can predict. Okay, we can get ourselves in a mode that, okay, maybe, what are we now? Okay. Have I changed my time frame or what? No, this is not what I'm looking for. Australia, this one, that's it. Okay, we will be expecting this one also to go a little bit up. That will be a kind of focus, but do not ignore that the price is now going down. It's at the support level. Will it find a support like a gold US dollar? That is the question. So this will conclude our discussion today about how to spot, buy, and sell trading signal using bird's eye view. So you want to understand that when we are talking about bird's eye view, we are looking at the chart at the highest level, comparing different price structures. We are looking for similarity or dissimilarity between the price structure to determine whether they are positively correlated or negatively correlated. The next thing that we are looking for latency. Is one ahead? Is one lagging? We are looking also for discrepancy. Is there a difference between the two structure, though there are similarity or dissimilarity? With those information that we are gathering, like computers, trading algorithm, trading software are doing that job automatically. We want to do the same thing. So when we spot that, all right, we go into the mode of bird's eye view and make a forecast. But the forecast is not guaranteed, it's an expectation. We don't want to get carried away. We just get ready, like I said to you. Prior to bullish signal above, prior to bearish signal below, meaning that look for bullish trading setup above, look for bearish trading setup below. The price can do something that's completely different from our expectation. But the advantage of using the bird's eye view trading strategy is that it allows us to spot, excellent buy and sell trading signal before they even taking place. And when you are expecting it and you know something, there is a latency, there is a discrepancy, and you spot it in the financial market, some abnormality or some distortion in the financial market, you have an edge, and you can if it start happening and you take part of it, the feeling is so good. That's why sometimes I use the word like trading like God. You feel like God that day. Though losing trade do happen, that will compensate your losing trade, and all the disappointment will disappear at that point in time. As always, if this is the first time you come across a trading strategy like this, you say, George, well, you are the man, all right. You are trading like God. It's true. You are the man, all right. And you think that I want to try it also. This is what I'm going to work with now. So calm down for a second, all right? So the best approach is very simple. It's like somebody talk to you for the first time about, trading algorithm, or somebody talk to you about, mathematics. And you say, oh, I like mathematics or physics or something like that. And you really get excited. So that's the first reaction. It's normal. So you just want to do it straight away. But the one thing you don't want to do is to cut corners. So how do we avoid cutting corners? The best way, now you say, this is the gathering of the information. That's why the computers are using statistic information. So you gather the information, you note it down, everything I said today, you say, yes, I'm happy about it. Now you want to digest it. This is the assimilation. So taking in the knowledge, now understanding the knowledge. Now the next step is putting into practice. Now the purpose of putting the knowledge into practice is to gain the skills. You can learn on YouTube how to build a table, how to become a carpenter. But until you start cutting those wood and using the nail and all the other instruments, you're not going to do anything. It's the same thing. You can play computer games about racing, but until you get into those Formula One car, you are not a top man like Hamilton. All right, so use a demo account. Practice. Don't rush. You can take 2 weeks. You can take 1 month. Just going over this. You may say, oh, if I knew I could have buy, I could have sell. Oh, I missed this. Don't worry about it. All you are doing, you are just training yourself like a boxer in a ring. And then when you are ready, you are more composed. You go to different scenario. You may say, oh, the first time you may know where you say, John, well, I need to watch that video again. Or you may dump it and come back again and look at it and say, yeah, I made this information and so on. Or maybe you just need or the first time you try it, you forget to apply a top-down trading method, or you forget to follow the trading aid. So use a demo account, practice, work on it, until you master it before going live. It's a powerful information about spotting trading signal using bird's eye view. As I said before, it's nothing to do with currency correlation itself. It's about comparing price structure to determine a similarity or dissimilarity, and trying to find out whether there are latency or discrepancy or distortion that the market will correct sooner or later. So this will conclude our discussion today about how to spot, buy, and sell trading signal using bird's eye view. If this video has been truly useful to you, please let me know by giving us your thumbs up. All right, you need to be watching this on YouTube before you can give us the thumbs up. But if you are watching this on Facebook, you can also like it, yes or no? Yes, you can, all right? If you think, George, well, this is another repackaging, useless video, in my view, mark it down, please, all right? However, if you think this is an essential tutorial that can help other traders, please share it with your friend either on Tumblr, Google+, Twitter, or Facebook. I will really appreciate that, all right? If you have not yet subscribed to our channel, okay, please subscribe to our channel today. It is free. Click on the notification bell. All right. Our channel is George Trio YouTube channel, because I will be posting this video. You may be wondering why, George, you don't remember your channel, because I have other channel, so I'll be posting this one at George Trio YouTube channel. So subscribe to George Trio. So George, GeorgeTrio, George Trio. Okay, YouTube channel. If you're on Facebook, go to YouTube, subscribe to our YouTube channel, George Trio channel. All right. As we are talking about currency pair, there is another YouTube channel that a lot of traders are not aware of, where I also post video about Forex. That channel is 24 Forex Trader, digit 2, digit 4 Forex Trader. All right, so subscribe to 24 Forex Trader. There are other videos. So the video that the gentleman was commenting on was Australia. This one, Australian FS Trader dissect Australian US dollar price action like a pro. This is the video that the gentleman, Mr. Maguire, was watching, and he spotted the similarity between the Australian US dollar and the gold US dollar. So with that comment you see now, we are recording this video, so feel free to subscribe to 244S Trader YouTube channel. And also, if you have any comment or suggestion about this tutorial, feel free to put it below. I always read the comment, and in due course, I will be recording another video to answer your specific question. We have other YouTube channel if you are interested. So apart from Joe Trio, we talk about the 244S Trader. For those of you who are trading area way or who want to master area way strategy, our channel is 24 Elliott Waves in plural. As always, 24, that is digit 2, digit 4, Elliott Wave in plural, YouTube channel. Another channel that may interest you if you trade Fibonacci extension, Fibonacci retracement, CCI, RSI, gap trading, all right, is that channel is Day Pro Traders YouTube channel. So you may follow us on YouTube or all those different channels that are specialized on a specific topic. That's what we are doing on YouTube. You may also follow us on Facebook. If you are not following us on Facebook, our first Facebook page is called Stochastic-MACD. So look for Stochastic dash. All right, so this is, okay, yes, Stochastic dash. All right, our Stochastic dash, here it is. This is our Facebook, okay, page. So sometimes I post video first on Facebook before posting them on YouTube. Sometimes I post the videos on YouTube first. So as you can see, this one here, it's a video that is scheduled to start in the next 30 minutes. You see here. But this is a live recording. So it will be showing it will be streaming it live. It's like going to film. So they will be, you go to film, you watch the film from the beginning, but you are watching the film like a live, all right? But the film is not produced at that point in time. It's not a live recording that you are watching, but you are watching a premiere recording. So you record it, now they are showing it live. So there is that function with Facebook that are live. So I record a video, I schedule it, the people will watch it live. This is it here. So come here. I'm busy on Facebook and also very busy on YouTube. All right. So this will conclude our discussion today about how to spot, buy, and sell trading signal using bird's eye view. Happy trading to you all, and I will speak to you soon. We are the TSTW24 traders talking about how to spot, buy, and sell trading signal using bird's eyes view. Thank you for watching.